Gentleman's time has expired. The gentleman from California, Mr. Sherman, is now recognized for 5 minutes.
Thank you, Mr. Reuter, for mentioning the importance of having a bank where the bank is based in your city. And I'll take a moment just to bemoan the fact that Los Angeles is the largest megalopolis in this country, where most couldn't even name the largest bank actually headquartered in Los Angeles, since we don't have one befitting the size of our city. And I'll advise my colleagues that San Francisco is not a suburb of Los Angeles, much as we in Los Angeles would like to think so. It is over 400 miles away. That's further than it is from here to Boston. Back in my day, and that was many days ago, banks could make a prime plus 3, prime plus 4, even prime plus 5 loan. Now, that wouldn't be the whole portfolio, but that would be a chunk of the portfolio. And a local business could be their source of capital. And local small businesses have a chance of failing. Prime plus 5 was not an outrageous amount to charge when a business had a 5% chance of defaulting. And if there's a default, maybe you get half your money back, but you certainly don't get it all. How difficult is it for a bank to make a loan to a business that has a 5% chance of defaulting? Is it impossible under today's regulation?
It's not impossible, but it is more difficult with today's regulation, absolutely.
And we talk a lot about, we just had hearings of the subcommittee on which I'm the ranking member about getting capital to small business. The pizzeria in my district doesn't, they need a new stove. They're not looking to do a Reg D offering. They're not looking to talk to a venture capitalist. They go to the bank. And since the pizza really isn't that good, their chance of failing is 5%, and they don't get the loan. But if we can't get money to businesses that have a 5% chance of defaulting, a 5% chance of you losing half your money, you got to build in 2.5%, 3%, then small business isn't going to get funded unless your brother-in-law can come help you out. Let's see, Ms. Marcellin, we've talked a little bit about de novo banks. There are other institutions that can be helpful. How can credit unions act as a vehicle to address the unbanked and underbanked communities, both on the business and the depositor side?
Thank you, Congressman Sherman, for that question. Going back to credit unions, one of the pieces of legislation that AFR supports is the Overdraft Protection Act. We would like to see credit unions also limit how much, or actually pretty much stop their practices of charging overdraft fees and NSF fees. The same thing with minimum account balances, basically decreasing barriers to making people, especially low to moderate income folks and communities of colors, from opening a bank account. And as the name implies, a credit union, it should be a pretty low barrier.
I'd point out that if a business actually incurs costs, they've got to charge something. But some of the fees that you talked about are much higher than they should be. Mr. Reuter, I think Mr. Barr has a bill that provides relief from the first 3 years from a de novo bank from a lot of the standards on liquidity and capital. Does that pose a problem of the bank not having the liquidity that it needs to meet its obligations during its first 3 years?
I do not think it poses an issue, because it takes time for a bank to acquire customers and acquire the assets. And so to start out day one with an assumption that they're going to be much bigger in 3 to 5 years without a ramp up, I think isn't a good strategy.
I yield back.